On another tough Monday, Jim Cramer here to answer your questions from social media. Jim, let's start with what everyone's asking. Do I stay in cash now for another year or two?
Yes. There's no need to get in other than own some gold. Remember, I've always been pro gold, and I know that there was a long period where people just said, why did you make me be 10% gold? And the answer is because of right now. It's the insurance. It's the only thing that's really working. I urge people to read Bruce Kamich, Kamich, on Real Money. There's an open house right now. It's free. He's been dead right. He even has a great call on golds.
All right, we've got some questions on stocks now. Amazon, sell or hold, it's getting choppy out here.
Amazon's a cold stock, and right now the cold is turned against Amazon. So there was never any valuation underpinnings. This is like why people say, Jim, you came up with FANG. Why did you tell me to buy FANG? No, I came up with FANG because it's what was going on. I've always said that Netflix and Amazon are cold stocks. They're hard to value. If you really love them, you buy them. That's what people do. I can't stop anyone from buying them. I do think that Netflix has a defensible turf because there's the over the top is so good for them. But you understand that Amazon did not report a good quarter, and people don't want to be in anything to report a good quarter.
Any thoughts on Disney here?
Disney's about to report, and I have said, and I'm going to be very specific about it, that if you own Disney long-term, 5-year perspective, it'll be fine, but that you should wait till they report the quarter otherwise.
What about CVS in light of all that drug pricing talk last week?
Well, we own Walgreens for Action Alerts. Action Alerts, by the way, open right now. You can see what we own. You can see why we're liking it. And Walgreens can't get out of its own way, even though they're doing a very good deal with Rite Aid. CVS, Walgreens, these are just in free fall. I just remember them. They're doing very well. The stocks are being disassociated from the actual underpinnings. CVS, very good company.
What about big banks? Are you liking any here? Is there opportunity to pick up Citi at a discount?
Citi's an incredible discount, as is Bank of America. Very good back and forth Bank of America on Real Money, which is free right now. Again, I'm emphasizing that because it won't be free soon. We own Bank of America for Action Alerts. Why? Because it's never had this discount on the tangible book value before. Maybe when the Fed finishes its stress test in June, they'll be allowed to buy back stock. I spoke a lot of time with John Stumpf last week, CEO of Wells Fargo. Yes, they have oil and gas loans. Yes, they are reserved against them. Yes, they will put more reserves in. Yes, the stock is cheap. Yes, they're buying back a huge number of shares. No, you can't just be in there and buy it right now. You have to wait till it goes lower. I've been saying 3.5% yield might be a good place.
Jim, Real Money has identified Sprint as a stressed out stock. We have a question. Is the mobile giant really reduced to penny stock status?
It could. The common stock is irrelevant. Now, one of the things about the stressed out index, which is Passery and Carlton English have been really all over this at Real Money, which again is free, is that the common stocks in many of these are not worth their call options. It's the debt side. That's why they're stressed out. In this particular case, Sprint has the most debt. If you look at the HYG, which is the high yield junk index, so to speak, Sprint's the biggest position, and I don't understand how Sprint common stock can necessarily be a good call on Sprint given the balance sheet.
All right, Facebook obviously trading in a different area. Will that company split?
No, and you shouldn't own a stock for split. And Facebook reported the best quarter of the year of any of the growth stocks, and all that does is just make it go down less because it's still part of a cohort, and the cohort is high growth, and there's not a lot of money going into high growth. There's a lot of hedge funds shooting against high growth, so powder dry, powder dry, powder dry.
Jim Cramer, thanks as always. Send your questions to Jim on social media. You'll find him on Facebook. He's on Twitter too. Use hashtag CramerQ. I'm Rhonda Schaffler for The Street.
To get more of Jim Cramer's investing ideas, as well as a peek at other stocks he owns in his multi-million-dollar charitable trust portfolio, subscribe to Action Alerts Plus. Sign up for Action Alerts Plus at getcrameredge.com. That's getcrameredge.com.